But at the end of the day, the question remains, what is the most likely scenario for Citigroup? Stuart Plesser joins us now. He is a bank equity analyst at Standard & Poor's. Stuart, glad to have you with us. You say the company has enough capital, has enough liquidity to bear bad quarters. But what about this just gloom that seems to be hanging over the stock, where traders are asking, is the stock actually going to close beneath $4 a share?
Yeah, I think that's the issue. Really, is the stock price is really making the news on the stock right now. In that, the lower it goes, the lower the confidence in the company becomes, and it becomes a self-fulfilling prophecy of their customers, trading partners, and the like, starting to say, do we want to do business with this company, which is really could be, the dangers for the company out there, not the immediate capital positions for the company. I
mean, and that is really what some people argue was part of the pressure that took down Bear Stearns and took down Lehman Brothers, this idea of counterparty risk. Now, Citigroup, obviously things have changed since those other two incidences, so Citigroup is not as vulnerable. But does the company have to be broken up? I mean, the CEO is saying it's not a possibility, but is it going to happen despite his best intentions?
Yeah, I mean, of course, the company and the CEO doesn't want to break up the company. I mean, they have a plan going forward, and without these legacy assets, that they really risky assets, it's a plan that could work. But going forward, it's just a matter of where do their trading partners do they start losing these businesses and clients, let's say, in their asset in their wealth management business, and if that's the case, his hand is played for him, because you've got to sell an asset before it really starts to disintegrate on you, and that's what they're probably watching, is to see how quickly are our customers fleeing.
Now, Citi has written down or lost $66 billion since the third quarter last year, but it's also raised $74 billion in capital. We know it got $25 billion from the U.S. government. I mean, what kind of picture does this give you, Stuart, as an analyst?
Well, like I said, I mean, from a fundamental standpoint, when you look at capital ratios, that with the TARP money they got from the government, they're projected to be over 10% on a Tier 1 capital ratio basis, and you could look at their liquidity right now with their deposits and add it up and say, this company is not in a bad capital position. But you could throw that all out the window if customers and deposits there's a run on deposits or something of that nature. That's something that you just can't analyze, and that's something that's done some other companies in the past.
What did you think of Bin Talal increasing his stake yesterday?
I'm not sure how significant that was. I mean, it wasn't about it was a small percentage, really, and perhaps that was a conversation between and trying to just that notion of trying to get confidence in the company, because even earlier in the week, the whole presentation of where the company stands and what they're doing was a lot to do with expounding the capital ratios and where this company is at right now, and trying to show that they're strong and going forward. So this seems to be part of that whole process.
So, Stuart, I mean, you have a hold on the stock, so obviously you're not telling an investor who does not own the stock to buy in right now. What would you tell people who do have it now? I mean, should they consider selling? At what point do they have to sell, or do they just hold it because it's around $4 a share? Yeah,
I mean, the stock obviously is at extremely low historical levels, and that's hence the hold recommendation at these levels. This is something that like from a fundamental standpoint, you make the case that the company has the capital, but this is something that's out of the hand. So where the stock goes on that basis is a little difficult to say.
Stuart, we thank you. Stuart Plesser there from Standard & Poor's on